Welcome to America's Commercial Real Estate Show, your source for intel, forecasts, and success strategies. Hello, I'm Michael Bull. Thank you for being with us. This segment's brought to you by BOMI.org. That's B-O-M-I. They are the leader in education for facilities and property management. Check them out at BOMI.org. Well, we have an incredible show for you today. Those of you who have watched and listened to the show for many years know that every year we cover emerging trends in real estate. Now, this is a great report I look forward to every year, and it's put out by ULI and PwC. And it's a pretty incredible, it's pretty respected. We're going to hit some of the highlights of it, some of the trends that we're seeing, what to expect moving forward. And in the last segment, stay with us. We're going to talk about some top markets to watch moving forward. Please welcome my guests. I have Mitch, Roschelle, and Byron Carlock here with us in Studio One. Now, they are partners with PwC, and they lead the real estate world. Gentlemen, thanks for being with us.
Thanks, Michael.
Thank you, Michael.
Well,
Good
we
to
appreciate
see you
it.
again.
And most of our audience knows, but briefly, why is emerging trends in real estate done, and how is it done?
So basically, the membership of ULI that we've been partnering with for about 15 or so years on the publication gets a survey in the late summer, mid to late summer, and 2,400 people respond to the survey or are subject to a one-on-one interview with Byron. But the 2,400 is the high watermark. We've never had so many responses. This year actually happens to be the 40th anniversary of Emerging Trends, and maybe in a bit we can talk about things that we've learned in 40 years, but it's an incredibly, and we appreciate you having us on every year, it's an incredibly durable publication that is so widely read that we're really honored to be a part of it.
Well, I guess after 40 years, you're starting to learn some things that kind of about history. And I think a lot of people are concerned about, hey, where are we moving forward? And have we learned from our past transgressions, of overbuilding?
Sure. Well, it's interesting. I think this cycle is, in fact, different. Many times real estate folks say that every time, but you really look at how long this recovery has been as we're going into the 11th year now. And it's pretty exciting to see that the industry is in pretty good shape, has resiliently recovered from the global financial crisis, and it doesn't look like this is going to be stopping anytime soon.
Yeah.
Right, Mitch?
Yeah, and what's interesting, if you go back 40 years, just let's think about the size and scale of the real estate industry today relative to where it came from. So if you back in 1978, when Emerging Trends in Real Estate was first being incubated, and maybe I'll step back and give you a little perspective on it. Equitable Life Insurance Company created Emerging Trends in Real Estate because they were a leading open-ended core fund manager and a separate account manager. And at the time, what they wanted to do was get feedback from their client base and from real estate market participants on where they thought the market was headed so that they can use that in their calculus for how they would invest going forward. And it's grown. The marketplace at the time for, this is all commercial real estate, was $243 billion back then. So that's the overall size. There's a lot of different ways to look at it, but less than $250 billion then. Fast forward to today, $6.2 trillion, right? So that's the size of the commercial real estate universe. What's really interesting, when we asked the participants what has changed, and if you go through the list of things that they talked about that are new, none of them were really that new, although the big takeaway for us was the advent of REITs. So the Real Estate Investment Trust actually existed prior to 1978. It was a creature of the Internal Revenue Code from before that, but publicly traded REITs weren't that prolific. So if you wanted to invest in commercial real estate and you were not an institutional real estate investor, you didn't really have an opportunity to do so. There were syndicators that were really small in scale relative to the overall almost $250 billion. And that was your only pathway. Fast forward to today, real estate, commercial real estate investment has been totally democratized. Anybody around the world can invest in a commercial institutional asset side by side with the big fellas, right? And that is the most amazing thing.
And it's a respected and important piece of the asset allocation wheel for investors.
Yeah, and what's interesting, I talked about life companies. At the time, the chief investment officer of the life company would have said, our allocation to alternative assets is X, our allocation to real estate is Y, which was a subset of X, and investing in commercial real estate wasn't an opportunity, it was an obligation. We're required to invest X amount of capital in real estate in dollars or in percentage. Fast forward to today, it's a go-to strategy for investors around the planet. Yeah. And the ability to access that kind of capital and the ability to get in to a trophy asset is really the thing that has totally changed in 40 years. Jokingly, we've said that the asset class has been legitimized over 40 years, and what's going to pave it forward, maybe we can put the sound in behind this, is it's now too legit to quit.
Too legit to quit.
But that's the thing that's really happened to us that was the aha moment. Some people said securitization, something that's happened in the last 40 years, and that's new. But if you think about it, CMBS, commercial mortgage-backed securities, is really taking a mortgage and slicing it this way and letting investors invest in different parts of the stack, okay? What happened before that was commercial real estate loans got syndicated across different banks. So that's taking a loan and slicing it that way. So I'm sorry, slicing it that way or slicing it that way, that's not really innovation. But letting people from around the planet invest in a trophy mall, a trophy office building, as a retail investor in increments of one share, to me, that's really the game changer. And I'm not trying to do a commercial for REITs, but I really think that, and then the derivatives of REITs, having mutual funds that invest in REITs, having exchange-traded funds that invest in REITs, that has really poured a tremendous amount of capital in, that has sustained real estate in good times and bad.
Yeah. At the same time, we're watching the structure of the fund business change as well.
Right.
And the growth of funds across different themes, different holding periods, and now big growth in the open-ended funds. So I think the big point, as you mentioned, is not only the democratization of real estate, but the acceptance of real estate as an important asset in anyone's portfolio, and percentages allocated to alternatives, which is mostly real estate and private equity, a little bit of hedge, ETFs, is growing. Yeah. And it's growing across the institutional complex as well as the continued growth of the REIT industry. And then sovereign wealth funds now have real estate dialed into a percentage of their investment activity.
It's part of the comfort level that's legitimized commercial real estate as an asset class around the world. As part of it, transparency, more information. You look at emerging trends. If you get a chance to read it, we'll have a link to the actual report, and we're going to talk about some of the highlights and trends from it. But as part of that legitimacy, that there is more transparency, there is more information, there's a show like this that you can kind of get a better understanding.
It's really all because of the commercial real estate show. I mean, you've been around for 8 years of that 40, and if you just look at the chart of where commercial real estate's gone in the last 8 years.
Meteoric.
Meteoric. So I'd have to think it has a lot to do with the commercial real estate.
Yeah, we turned 8 tomorrow as we're taping this today, so we are officially 8 years old.
Well, this is when this airs.
Recovery.
You will be 8. You'll be in your 9th year.
Yeah, there you go.
And all kidding aside, it's really always been a thrill to be part of that. And no joke, I think that the amount of information that exists in commercial real estate today, the brokerage community and the amount of information that they have, all of the data services that exist today. What's interesting in putting the slides together, some of which will be part of this video podcast, or the YouTube podcast, whatever you call it, Michael. But anyway, and Andy Warren is not here because he's back in the R&D lab cranking out more slides, but Andy's been on with us in the past. Some of the data doesn't even exist going back 40 years. There's actually a dearth of data, so data has a lot to do with it. I also want to go back to REITs because they're publicly traded entities and they have a responsibility pursuant to the SEC rules to provide transparency. That's important. The advent of rating agencies and securitization created an additional layer of information that's out there. So I think information is key to that. And that's not necessarily because of technological advancements. That's just because of the demands of the marketplace. Private equity has also grown. Byron referenced that. And if you look at private equity, there are ways for accredited investors who aren't institutional investors to invest side by side. and some feeder funds with the big private equity players. And the amount of information that they share with investors is pretty amazing as well. So I think you nailed it with the question. I think that information transparency is a big part of the legitimacy of the asset class today.
Yeah, and you think about commercial real estate or real estate in general, you want to skate where the puck is going. And I think that's why a report like this is so important, and a show like this to kind of, you want to know, hey, what is impacting real estate, the economy, what are the trends, so you can make decisions moving forward. And quickly before we end this segment, if you looked at the overall report and you said, hey, what's the theme this year? It's different. What did you get out of it?
I think we're going to tackle that in other segments. That was a hell of a tease, right? The one thing I'll tell you about skating where the puck was going, and this is a true story, several years ago when we started hyping in the report industrial as a place to invest, and industrial, spoiler alert, is still a hot subsector. Somebody who said to me, who's a big player, said, will you stop talking about industrial? And I said, why? He goes, we want to buy it, and if you put it in a report, everybody's going to want to buy it. And I said, we interviewed like 1,400 people, and like 900 of them made industrial top. You're not alone. It's a crowded trade.
Yeah.
But definitely, we try to talk about things before they happen, and when we unpack some of the trends to follow, I think that's what we're going to be doing.
Yeah, and I like it. So not only do you look at the market reports to see kind of what's been going on, but you do these interviews, and they interview people from all walks of life, if you will.
Including you.
Yeah, I was interviewed, and so it might be skewed as a broker in there. Yeah, so we'll stay with us. We're going to talk about some of the trends that they picked up in Emerging Trends this year. Stay with us. I'm Michael Bull. This is America's Commercial Real Estate Show.